Tata Consultancy Services will kickstart the second quarter earnings today, and it promises to be an extremely exciting and interesting earnings season that lies ahead of us. Because if you have a look at the consolidated estimates that we've pulled out for 192 stocks that are tracked by a minimum of 5 analysts, you can see that sequentially most of these sectors are likely to post growth or across their parameters, which is revenue, net profit as well as EBITDA front. However, the same parameters, if you have a look at on a YOY basis, it is likely to be a subdued earnings season for most of the sectors. So what we have done is split it into the 3 categories. One is by revenue, the other one by net profit, and the last one being operational performance by tracking the EBITDA of the company. So let me run you through one by one how each of these parameters and the sectors that are likely to be in focus because of this. First, let's start off with the revenue parameter. Now, if you have a look at the quarter-on-quarter basis, 8 out of the 10 sectors are likely to post revenue growth on a quarter-on-quarter basis, which will be led by the consumer discretionary space, and that is primarily because of the auto components that belong to the consumer discretionary space, because Q1 was a washout quarter for them, and Q2 they have got some bit of revenue back into their income statements as well. However, the same parameter on a YOY basis, 7 sectors are likely to post a revenue decline on a YOY basis, which will be led by the utilities, real estate and the energy pack. Moving on to the net profit parameter, quarter on quarter, if you have a look at it, 6 sectors out of 10 are likely to post net profit growth, which will be led by materials, that is primarily the cement and the metals pack, along with the real estate pack as well. On a YOY basis, 5 out of 10 sectors are likely to post a net profit decline, which will be led by the industrial space, materials, once again the cement and metals pack that I'm referring to, real estate and utilities also belong to this particular category. Lastly, if you have a look at the operational performance, which is the EBITDA that we track for the company, sequentially 8 sectors out of the 10 are likely to post an EBITDA growth, which will be led by consumer discretionary and the industrial space, where you have most of the capital goods companies that will be included in this space. And on a YOY basis, you have 7 sectors which are likely to post EBITDA decline, and there's a whole host of sectors that belong to this list, starting off with consumer discretionary, industrials as well as the communications pack as well. But out of all of this, the key takeaways or the key sectors that I'll be watching out for would be 3 of them. One is the IT sector, because if you have a look at across parameters, which is revenue, EBITDA as well as net profit, and if you also have a look at sequential performance or the YOY performance that we refer to, the IT sector is likely to post growth in all the fields that we have listed so far, along with the consumer staples, which is also popularly called as the FMCG sector as well. So all parameters are likely to post growth across the time frames that we look at. Lastly, watch out for the healthcare sector also, because it is likely to post growth for all parameters across the timelines except for sequential EBITDA growth.